Has gold had its peak? Is it going to be the new digital gold in Bitcoin that's replacing it? And what has the US and the potential strategic Bitcoin reserve bill to do with this? We're going to answer all of these questions in this video. All right, you may have seen the following clip by Senator Cynthia Lummis on X or on social media in the days on CNBC.
We wouldn't have to spend any new dollars. We have reserves at our 12 Federal Reserve banks, including gold certificates that could be converted to current fair market value. They're held at their 1970s value on the books, and then sell them into Bitcoin. That way, we wouldn't have to use any new dollars in order to establish this reserve. The United States already holds over 200,000 Bitcoin in the asset forfeiture funds. So that would be the initial source of Bitcoin.
In it, she explains how she wants to use portions of the gold reserves the US has and transfer them into Bitcoin. The idea is very simple. She says gold has its place in time and being. However, we need to jump on the digital gold train and use Bitcoin to reduce our debt. Fair enough. We as Bitcoiners know this. However, to answer the question if this makes sense and whether gold is being replaced by Bitcoin, we actually need to take a short history lesson and find out why gold has been used by central banks and banks alike. Gold has established its name as sound money because back in the days, you used to use physical gold coins to pay for stuff. And if you actually drop them, they would make a significant and specific sound. If it made that sound, you could make sure it's a gold coin and not a replica or a fake. Therefore, the name sound money emerged. And gold really has had its history as a money. It's been used as a speculation tool. Then it moved into the Roman times and the Roman Empire, into the antiques, and then into today's society, where it's being used more as a commodity and as a hedge against inflation, crisis times, economical uncertainty. However, there was a time in history when it was actually used as money as well, how we know it today with physical notes. See, the world reserve currency, the US dollar now, used to be gold-backed up until the 15th of August 1971, with the Nixon shock and the infamous interview by Richard Nixon, where he states that they have to get rid of the gold standard temporarily. Technically speaking, the US could implement it again, but that's very unlikely, to actually finance the war in Vietnam. This was the birth of fiat money as we know it today, where there is no backing. There is no X amount of ounce per dollar to back that currency with, which gives the central bank and the financial institutions more leverage and more freedom to play with. If there's times where they need to expand the monetary policy, they can do this. If there's time where they need to flood the markets to stimulate growth, they can do this. However, this comes with a downside. The money you actually create is being inflated away, as we see with all major fiat currencies who've lost a significant amount of their purchasing power since its introduction. Gold used to be the perfect commodity to actually stimulate that money because you could back it. However, since it's gotten rid of that backing, gold has become more of that protection for especially central banks and investors alike against uncertainty. So we basically moved away from gold being the status quo to gold being the last resort before a crisis hits, which is also the reason why you see many central banks starting to hoard more gold in times of trouble and starting to sell gold if times ease. So what does Bitcoin have to do with this? Compared to gold, or as it's Bitcoin often called digital gold, you see actually vast synergies. Both are being mined. One is being done with heavily resource-intense machines. The other one just uses a computer and tries to solve a hash. Both are scarce, although Bitcoin's scarcity is given with 21 million. It's hard-coded into the program. Gold's scarcity is more of an estimate, and there could always be a meteoroid hitting Earth and there would be more gold. However, gold's scarcity is given due to the fact that it's resource intense to mine, it's hard to find, and it has the established history as an advantage compared to Bitcoin. Both are also extremely fungible. It's easy to exchange the value between them. And at the end of the day, both of them are extremely dividable, meaning I can have a small coin of gold or can have a huge bar. And with Bitcoin, the added advantage, I can have one Bitcoin or I can have one Satoshi. As you know, there are 100 million Satoshis in one Bitcoin. So in both cases, if you want to use it as money, it's possible. I don't have to pay my coffee with a gold bar and scratch off a few gold scratches. I can actually just use a coin. However, and this is where we get into the state as to why Bitcoin is being categorized as digital gold and superior. In the digital realm, Bitcoin has a huge advantage. It is digital in its native form. There is no Bitcoin coin. Sure, there were wallets which were backed with a Bitcoin coin where you had the private seed on them, but that's more as a collectible item and as something you could gift to someone. Gold, on the other hand, is digital in its form, but it's paper gold. At the end of the day, being traded either with a futures contract or with a price on a screen. Bitcoin, if you want to use it in your everyday life, can be used as digital money. I can exchange value. I can pay for my coffee if the vendor accepts it. I can do the same with a gold coin. However, it's less likely that that vendor will actually accept it. And if he does, it's a very heavy transaction, meaning you need to bring the coin, you need to verify it, it goes longer. With Bitcoin, it's just a simple pay of an invoice and that's it, it's done. Because if it plays according to the network rule, everything is safe. So this begs the questions, why are countries such as the US, Brazil, and other states in the US, or even countries as Bhutan and El Salvador so bullish on Bitcoin? Well, it's the continuous evolution of what gold used to be. Gold has its place in the world as a reserve asset, as something you use in crisis. However, it's lost the train and it's lost the bridge over to the digital world. It's superb if you want to have cash that's backed by gold. No question about it. But you need the next evolution. And this is where Bitcoin comes in as digital gold. It needs the history that it has established compared to gold. Gold has a 5,000-year history. It's being used as money, it's as a backing of currency, and it's being used as a security now against uncertain times. However, Bitcoin doesn't have that yet, which also explains the huge volatility. But the longer Bitcoin takes to get closer to gold in its market cap, the more likely it is that this volatility is also going to decrease. Does this mean now that we should dump all of our gold for Bitcoin? Me personally, I don't think so. As I mentioned, gold has its place and time in the world, and Bitcoin is just a natural progression of gold, meaning we could very likely see a future where Bitcoin is edging closer to the market cap of gold. Obviously, with that, also the value of Bitcoin increases. Some estimate if we get close to gold, it's going to be in the high six figures per Bitcoin. And therefore, if you see how game theory is playing out with the countries now, we would edge closer to a world where Bitcoin would be used as a form of backing our money, or even potentially the money of the world. But what do you think? Can gold and Bitcoin exist in both worlds? Is it a competition between each other? Or, as I've mentioned, is it just a progression of money and sound money in the digital realm now that's being improved with Bitcoin? Let me know with a comment below, and I look forward to seeing you in the next video.